You also look at the other store value assets right now and the way they're behaving. And I think that's actually confusing a lot of people at the moment when you look at gold's been ripping, silver's been ripping, right? All these other traditional store value or risk off assets that people flock to when there's uncertainty or doubt out there in the market, they're continuing to just grind higher and higher. And I guess that begs the question. I'm curious what each of your perspective is on that. Do you think that we now have a fundamental disconnect that's occurred between Bitcoin and these other store value assets, or is Bitcoin lagging the moves on these other store value assets?
Yeah, I think it's just lagging. The reason I would say that is was like a coiled spring for years and years, and it finally broke out, and it's doing its thing. And then you look at Bitcoin relative to gold, and it's basically sitting right below its all-time high. It sold off a little bit recently, but ultimately, when that breaks out, I firmly think that it's going to break out strong. I think that might take a little bit of time because it's been at that level since 2021. We're talking 4 years where Bitcoin has not made a new all-time high with versus gold, and gold is ripping. So I look at that in and of itself as a coiled spring. And ultimately, when Bitcoin breaks out at a new all-time high, I see the chart that just popping up here. That to me is when you start to see the massive positive convex move for Bitcoin. And not only that, I think it's when you see assets that are out the risk curve, specifically Bitcoin treasury companies, really start to rip again. And my view is that might take a little bit of time. It might take a few months. It might take 6 months. I don't know the exact time. No one knows the exact time, but the time to position for such a move is now. It's not going to be when it breaks out, because when it breaks out, it's probably going to be violently moving to the upward. And that positive convexity is hard to get in once it's started. And so it increases my conviction, and also the need for people to have just a bit of patience while they're watching these long-term macro events unfold.
Historically, I saw somebody else posted this the other day as well. Historically, gold has preceded Bitcoin's moves by 3 months. And so, yeah, time will tell. We're still not at this Bitcoin gold all-time high. This really looks like higher highs and higher lows to me, but yeah, we'll see where this goes. We were talking about and just thinking about the psychology of it too. You've got gold, which has been around for forever. It's been used as money for thousands of years. And now it's competing against this new instrument, Bitcoin, which has been around for 15 years. It would make sense that gold would precede any movements that Bitcoin would make, as people that hold gold through any sort of rally will get to these technically oversold or overextended levels and look for alternative places to park the capital that may be a little bit more efficient. So I think the psychology seems to make sense. And yeah, we'll see where this goes. Keeping an eye on it for sure. Since you brought it up a couple of weeks ago, it's been one of my go-to things that I'm taking a peek at within the market. What do you think, Ben? Do you weigh your wealth, Ben, in pounds? I
I
don't
do
know how
not,
much
believe
money
it
I
or
have,
not.
but I could tell you how much it weighs.
That's right. No, no, I do not, because when you're holding Bitcoin, it doesn't weigh very much. Not
Kilobytes.
necessarily the measure, but yeah, when you watch the trends that's happening just broadly, you can just tell that this is what people are searching for. And they're migrating out of the systems that seem to be manipulated and in kind of a spiral, I think is the way a lot of people are looking at these now. It seems like we're close to hitting that point where you can't put the genie back in the bottle. And they're going to have to start frantically pulling levers to try to right size the ship. And I just don't know, how much time there is between now and when they start doing that. When do rates come down drastically? We've got these massive home affordability problems. Jeff, one of the things that really stunned me was on one of the other shows that you and I were on, where they pulled up that statement
The
from Fannie
housing.
Mae that was
Yeah.
effectively saying that the price of the median home needed to come down, I think it was 35 or 38%, or the median wage needed to come up like 65%, or rates needed to go down to 2.35% to achieve home affordability of 2019. And that's a little terrifying when you hear those types of statistics, because it lets you know just how much we've disconnected since COVID came around, in that it's not gone back to those levels. Wages haven't kept up with the rising prices, and that's just homes. That's not including everything that's happened at grocery stores and everywhere else. So it is a little terrifying, and I can see why there would be a significant desire to begin to hold store value assets right now, because this is a system that, when actively managed, has resulted in a dramatic loss of purchasing power and value held by the average citizens. So I think it is concerning, and I think there's a lot of reason for investors to be opting out of that. Now, you look at it the other way, and you look at, for investors that are savvy, looking at, like Matt said, going out the risk curve further, right? When you start to see these types of events line up, is that the time where you slide a little further out the risk curve because you can effectively see what's coming, because you can count on them to go and manipulate to try to make the economy stronger and things more forward. They're going to pull whatever levers they can to stabilize. So it is a balance. And I think it's one that people are going to be fighting for a while, because you're fighting it between what you know or what you believe to be true in the way that they will act versus the desire to protect yourself and your family at this point in time. Luckily, I think Bitcoin does both. So I think if you're looking for the all-in-one asset, I think Bitcoin's going to be the winner in that race ultimately. And I agree with what Matt was saying, that when we do start to see Bitcoin make its move, I think it's going to be a violent move. I don't think it's going to be a slow grind up like a lot of people are expecting.
And I'll show one more chart that we've talked about a little bit before, but I think the Bitcoin gold chart is probably what I think is the most important chart. But then the second most important chart in my view is DXY. And this line here, if you looked at this decline in DXY here, this was the 2017 bull run in Bitcoin. So basically, it was a bear market in DXY that correlated with an up move in Bitcoin. 2020-21, here you see April 2020, it's at a high. It sells off into 2021 when Bitcoin goes up. If you just look at the magnitude of these moves, they're pretty small moves, but yet they were very correlated with Bitcoin moving up as the dollar was devalued. And now when you look at, and just for reference, I think I've mentioned this, but this is a chart that I've been looking at since my days at Calvers. I literally have not changed this chart for over 10 years at this point. So it's not like I just made this morning. This is a chart I've been looking at with these exact lines, actually not this orange line, but these white lines, and looking at this downtrend for a decade. So anyways, this is consistency here. But if you look at it losing this historical support that turned into resistance to the downside, I think there's a decent chance that we could move substantially weaker. And part of the reason is not just because of a chart, actually. It's because literally the president of the United States, Donald Trump, has said he wants to weaken the dollar. And so when I talk about a dollar in DXY sub 70 range, while it's at 97, that might seem crazy. But if you look historically, it was at 70 in 2008. It was at 78 in 1992. It's been substantially lower historically than it is right now in a multi-decade downtrend. And so it's not actually in any way saying the dollar is going to collapse, because the dollar didn't collapse in 2008. It didn't collapse in 1992. What it's saying is that when the president of the United States wants to weaken the dollar, when he's taking very drastic steps that I think make more explicit the lack of independence at the Federal Reserve, and you have a debt crisis in this country, that it's not a crazy thing to say a weaker dollar. Now, if the dollar were to go down any level in this orange line, and you compare that to these other bull runs in the decline of the dollar, we're talking about an order of magnitude larger move in DXY than Bitcoin has ever experienced, not than the dollar's experienced. And look at these moves here in the 1980s. Look at this bear market in the early 2000s, 2008. Like, these sorts of bear markets have happened in the DXY before. If that happened, what would that mean to Bitcoin? I think the answer is, in my view, the argument of a super cycle, what a super cycle would look like. Because I don't think that there's any other scenario, if you actually saw that type of weakness in the dollar, than a Bitcoin super cycle. And okay, like, we're in an area where Bitcoin hasn't broken out versus gold. Great level to accumulate. You're at a level for Bitcoin of some support. It's gone down a little bit. I just think that people need a little bit of patience for a multi-decade macro situation to unfold. And in that scenario, this zoom out mentality, get your positions right and then touch some grass and don't shake yourself out of the conviction is the way to do this. This is investing in Bitcoin, going out the risk spectrum further into Bitcoin treasury companies. These are not get rich quick positions or trades. These are get rich slowly by having conviction to ride up the volatility. You ride up volatility with time. And I think that's, to me, that's why we even started the hurdle rate. Was this is a time game. This is a zoom out game. You need conviction and a long-term perspective. And there's going to be times where these things rip and are up a few X, multiple 100% in a short period of time. And there's going to be times that are painful drawdowns. And the right approach is to ride up both of them and always check your fundamental thesis. And I think what we're all saying is that the fundamental thesis of all these things have only gotten stronger.
Matt, I think our listeners and viewers would be very upset if I didn't ask you the obvious question, which is, what do you mean by a Bitcoin supercycle?
Yeah.
Getting everybody fired up here.
Yeah. Yes, get all fired up. So everyone might have a little bit different of a definition. My view is pre-super cycle, we would see corrections of Bitcoin in the 80% plus range. And I think those corrections probably go down to 50%-ish. So a little bit of less pain to the downside and more just up and to the right. And you can see super cycles historically for great stocks. If you look at when Amazon or Apple goes on these like 10-year plus just rippers up, and they're very painful for people that aren't positioned because they don't give an opportunity for people to get in the trade. They're just getting re-rated higher all the time. And it's hard for me to think if we did see that type of a move to DXY, that you wouldn't see such a scenario to Bitcoin where it's just like the people that are positioned are in a great position. And if you're waiting to buy the dip, you might be waiting 84 years because you might not, I say that in obviously hyperbole as the meme of the old lady waiting 84 years, but you just will not be able to get into the position easily because it's just keep going up. I think that is what a super cycle would look like. And I think that is and more my base case when all of this political unrest unfolds. That I still hope for the scenario that we don't wake up in a month and Bitcoin's at $1 million. So I don't think that would be the good scenario for the United States. But the reality is those scenarios become more likely, not less likely, as you see unrest increase. But even if that's maintained, I think the tailwinds towards Bitcoin have literally never been stronger since I've ever seen it. TLDR, it could go up forever. There is no top.
And at the end of the day, fiat is just credit too. Bitcoin's money, gold is money, everything else is credit. Fiat is just credit. We're like, we've been living on the system for people take fiat dollars as money because it's this genetic disposition that they've just known their whole lives. It's what their parents knew about money. It was what their parents knew about money. And it's just this extended credit system. Thanks for sharing that DXY chart. It was really fascinating, particularly what happened in the 80s too, looking at the huge spike and then the huge crash right after that as well. That's definitely a chart worth doing some historical research on.
Yeah, I want to actually pop up real quick the Apple chart because I want to show what a super cycle can look like for an equity because I think it's actually really interesting. And so Apple's chart here from 2003 to 2025, basically just nothing. And you think about that and you say, goodness, like what would have happened if, right here in 2005 when Apple breaks to new all-time highs, it would have been very difficult to find, here's a dip right here, but it just keeps moving up. And you look at that even compared to a Bitcoin chart, a super cycle, they do happen. You can look at Amazon and it had a over 10-year super cycle itself. Like these things happen. And when they happen, you better be positioned. And so anyways, I think this is this type of things that people need to be thinking about. I mean, if it doesn't happen, then obviously they keep buying the dip. But to me, that it's hard for me not to think that's the base case at this point, with the biggest risk to Bitcoin historically being regulatory risks, at least in the United States, being written down to near zero, that we have to start thinking a little bit bigger for the asset.
Yeah, Microsoft looks very similar too. And on both of them, when you look at that journey up, they both had drawdowns along the way of roughly 40%, 35 to 40% on the way up there. But The problem is if early in that journey when it disconnected and went on its super cycle, if you were waiting for the prices that you didn't buy at the first time, it never came back there for you. So be in position and be willing to sit.